Okay, I was talking, but no one was hearing me because I had my mute button on. Happy Friday, everyone. Talking about a little bit of, we saw this trend day coming in the pre-market this morning with the Bullish Bears group, and essentially it was pretty easy to spot. Let me get left a little bit here. Essentially, we have a basic measured move set up. They're pretty easy to see when you get used to marking them out. I tend to just draw my little box here and go, hey, there's a good chance that this can be the first leg of a bullish measured move. And sure enough, I had a price target first 418 and an extension to 420, and it nailed both beautifully. Now we're kind of sitting here consolidating going, well, we might even go higher. Let's get into that a little bit, and then I'm going to go and break down a couple of my personal picks, and I'm going to go and play with CNBC a little bit and see what they're talking about. So let's dig in. So looking at the weekly chart, let me turn the noise off. I've been talking about this cup and handle look for a long time now, and it's starting to really start to take shape. However, it's at a critical point. It can still take a while to melt through this liquidity that's being produced. If you look left and you see a big wick, just know that there are sellers there. That is a supply zone. So we're right up against it right now, and if we can crush that, sure, we can break out and start heading for the necklines, rim lines on the cup. So we got like 446 in view. You know, we've got an extension up here to 460. Come on, man, let's be bulls. So effectively, we've got the cup and handle set up, and I always say never trade the setup, always trade the break. This is kind of exactly one of those moments where we're just waiting in limbo. That debt ceiling is going to be kind of a trigger, and I'm kind of in agreement with what a lot of the chatter is in the chat there about this could be the beginning of probably one of the biggest bull markets we've seen in a long time, probably in our lifetimes, and it's starting to shape up. So today, this trend day was pretty easy to spot, kind of playing in this mess here. And yeah, SPY is looking more and more bullish in spite of the fact that QQQ is kind of ominous here, and it went divergent from SPY quite a bit. I don't know that we're going to catch up to it, but let's get the weekly chart out. Well, that cup and handle looks like it ate through the liquidity zone, and we're kind of bulling right along. Well, next target's right up here, Q at 360. That's coming. Even though they're a bit divergent, and usually when SPY and Q kind of diverge from each other, it's a ominous warning. People are, saying, well, it's likely to have a big pullback or market destruction, whatever. Sure, things can go wrong, but I think in short, we're generally bullish for the time being. One other thing to look at, and I kind of noticed some people starting to talk about it this morning. I don't have a chart that I can pull up on it, but I can explain that central bank liquidity was kind of going south while everything else was going north, and that's usually not a good sign either. But then suddenly we looked at the Fed balance sheet kind of spiking, so all of a sudden it just about faced. And I threw the meme in the chat there of old J-Pow saying just print it. So things are looking like QE is kind of rotating into the field here, and that's kind of correlating with a lot of what we're seeing here. Going into the debt ceiling confidence levels, people are starting to see the risk, but in general, there's a little bit of enthusiasm behind we're going to get through this and things are going to be just fine type of scenario. So we'll see what's up. As far as waiting for this move to shake out, yes, you can be patient and wait for the breakout, but in the meantime, there's plenty of day trading to be done. One of my particular favorites has been Tesla, and I'm going to get into a little bit of strategy on this one. So in Tesla, I've been trading this for quite a while. That's been one of my favorites for price action. Just measured move after measured move. As choppy as it is chartable, it is tradable, and enjoyable. Now we're at the top of a key point of break. That 192 pivot that I've had plain as day on my charts for a while now is becoming more and more evident. Look a little further left, we've got our daily chart. This is an angular resistance, and for some reason my software kind of skews this line a little bit. I drew this on the weekly chart. So if it's here, attached to that peak there, all the way back here, all the way down, we're right up under it, and you get to the daily chart, we're still just a bit under it, but according to the 2 hour, we're blowing through it. So it's weird how it skews like that, but I'll take it with a grain of salt. The way it's looking, though, is we cross that threshold, we are likely to set up a continuation out of this and start heading for our 50% retracement, which is kind of a common thing I love to trade, is those 50% retracements. Served me well down here on this break, went to the 207 target I had and beyond, did very well with that. Running a similar strategy this time, only with this chop that's leading into this trend swing, I've been able to convert and swap this strategy over and over and over again. I'm going to break that down for how I've been doing that real quick for you. So effectively what I do is I noticed that we were breaking above a key angular resistance. So I got long on a day trade here, did very well with that, and then kind of waited for the pullback, and eventually it happened. So I'm like, okay, well, it hit the support line 166.50-ish. Threw together June 16th call debit spreads, kind of way out of the money. I mean, I'm talking 240, 245 spread. Paid 4 cents a piece for those, piled them on, rode this up, and I've been on the price action where I get this little pop and then pullback. I've been selling credit spreads against it on the peaks of those, and then essentially sharing the same short leg. I can have a debit spread with a long call and a short call, and then I can add a credit spread on top of that with another short call, selling the same strike, and running another $5 up, buying another long call. So it kind of looks like this on your options chain. Only difference is it just converts it to a butterfly, but I've found that swing trading a short spread when you can, why the hell not? So when we get pullbacks like that, I'll just buy back that credit spread for much less than I sold it for, pocket the profit, wait for it to spike again, sell it again. Rinse, repeat, and slowly but surely I've captured just under 500% return on something that's already ordinarily this morning 100% return, and now we're approaching 200% on the debit spread side. But I'm free. I bought back that debit spread or that credit spread this morning that I had sold yesterday on this peak, running it, swing traded overnight. I only captured about 20% on that one, so it wasn't huge, but hey, that put me from one point to another. So long story short, now I'm open, I'm in my debit spreads, I'm riding this momentum, and I'm just waiting to sell another credit spread against it. But I may not. We're out of angular resistance, and we could very easily start trending here. So I may just sit on the debit spreads for a while. I've got time, June 16th expiration, plenty of time to rotate in and out of those. Probably going into next week, if price continues to run up, I'll start thinking more about locking that into a butterfly and just letting her ride. But I also have other options. I have many multiples of this spread, so I can go and profit half of them, rotate the other half, split it any way I want. I can completely adapt this trade as it's on and swing in and out of short positions. It's a neat strategy that has just been printing dividends for me, man. I've been loving this price action every step of the way, and it allows me to day trade without day trading, capturing profit of incremental moves day to day, and then compounding that into my position. I do this with the wheel trade strategy as well, where I buy equity, sell puts, sell calls at the same time, swing them in and out. My objective is to reduce my cost basis on the long position to zero. Same with the debit spread. I'm into it to reduce my cost basis to zero on the debit spread that I have risk in. And then beyond that, once I achieve more than 100% return, I'm now negative cost basis. So this is like having a position that you get paid to hold. So definitely continue holding it, right? I usually will run these debit spreads probably up till about the last 2 weeks expiration. So we're getting kind of tight. June 16th isn't that far away. Next week, I think I will either, like I said, profit the position or profit half the position, rotate the other half into credit spreads and convert it to a butterfly. Whatever I feel like doing. I'm just going to play it by feel. The best part about that strategy is it just gives you so much more flexibility to trade positions rather than just opening and closing things. You can just continually rotate income on them. One caveat to most of you people who are not using commission-free brokers for that, you got to pay attention to your commissions on those. It can eat quite a bit of profit when your move is only like, a couple pennies. If you've got $1 aside for transitioning these, it kind of negates the purpose. But in this case with Tesla, I've been able to do much larger position changes on that without having to. If I had to worry about commissions, it wouldn't really do me a lot of damage as far as rotating this. So it's possible to do with a commission broker, but it's much more lucrative to do it obviously with a non-commissioned broker. So kind of take that as it comes. It's a strategy that you can use pretty much in anything from your personal portfolio to, this is something hedge funds could do. It's really not that hard. It's just a basic swap strategy. If you were to take size into this thing with thousands of contracts, sure, it'd be a little fun trying to get in and out of that with houses, but I'm running, at most 100 or 2 of these, and it's no big deal for me to swap them, roll them, do whatever I want with them. Plenty of liquidity in Tesla, believe me. That's the second part of this, is that this is a strategy I'd rather use with things that have much higher options liquidity, because if I try to do this with a penny stock where open interest is 50, 100 contracts, I'm going to have a hard time messing with spreads in that. That's better for just running a wheel trade strategy, whereas if I've got plenty of liquidity, use it. Same with Amazon. Nvidia would have been a great one. I missed the boat on that one. That's okay. I'm in Tesla. I'm happy. Running things like this on Google is really, really fruitful and can be a very not just exciting strategy, but a relaxing one. It's a very profitable one. All right, moving on. I'm going to go pull up the CNBC and see what I can spot for their picks. And kind of parallel to Tesla, one of the news things that came up was Ford, and it kind of popped up on the radar for those guys over there. Ford is a stock I trade quite frequently, and although all of my dope has disappeared, you can't help but notice there's this giant wedge kind of looming out on the weekly chart, and I'm going to start drawing this really quick. So let me put this together for you. So I got this part, and something interesting happens whenever I see divergence like this. I'm going to show you something fun. Split this. Run it that way. There's your focal point. Split that. And you get what I'm calling the JFan. And I'm working with a developer to make this automated so you can just plot it on your chart. But when you have a wedge break, oftentimes you can pick a measured move off really quickly, and that's where we go to the daily chart. Well, now we have an opening channel and we have a regression line, and well, there was a pretty nice little double bottom here on a daily. Easy trade for Ford to be bullish, run it to the regression. It went a little bit beyond even. So this is something that I utilize on a very short-term chart, but it seems to work for just about every time frame in analysis anyway, and I can usually pick off some pretty good swing trades with it. So knowing that that was my target off of this big giant looming double bottom, you couldn't help but notice. Cross that price, start to run bullish, bam, target met. You can see it right here in 1 2-hour bar. Even though that wick stuck out of it, that was where everybody was looking for the exit, taking profit on that move. Well, now it's kind of compounding into a much longer position. It's parabolic. So I do enjoy trading Ford. It's a great, highly liquid options trading platform for me to use as a tool to teach people. Options at the money and even one strike out are just dirt stinking cheap, really easy, low risk type of stuff. This is something you can run that debit spread strategy in with just barely enough oomph to run the conversion into a butterfly. Because these options are not as volatile, this equity is not as volatile as something like Tesla or Amazon, you can have a much harder time using that conversion strategy on Ford. But if you can learn how to do it on something like Ford, your risk is stupid low. You can really take advantage of the practice of the method. So running with that type of stuff, you kind of get the idea that you can pretty much take the same strategy to everything, but you're not always going to have the same results. And it comes down to, it's not about what you trade, it's about how you trade it. take that a little bit to heart when it comes to option swap strategies, because it will be also about what you trade. So you have to have the kind of liquidity needed and the volatility needed to provide that kind of income on that kind of strategy. Doesn't mean there isn't a strategy for Ford. In fact, it is also very good to practice the wheel trade on, because it's a fairly low priced equity. It doesn't take much outlay to build a position on that. The only thing that I don't like about it is it doesn't have the best yield for those options, but you could still certainly generate income on those options. It's just not going to be as much dollar for dollar as something like I've been doing with OPEN, or I'm about to be doing with Peloton, PTON. So certainly there's a niche for finding wheel trade strategies, and then there's another niche for finding conversion strategies. And I've been perfecting that strategy with SPY as well, and that's where a lot of the practice comes from, because SPY is a little lower risk, however a little lower probability of making those conversion strategies work. When you get the idea of how they work, apply it to an equity with enough options volatility, and suddenly you've got a process that you developed with low risk, and you can go and take it into something with a little bit higher risk, but also a much higher probability of return. So fun. All right, let's get down the list here. So let's see here, the top 10 things. They kind of mention a bunch of things about the Fed and all this other crap, the S&P, the NASDAQ, the Dow, the indexes they kind of track. And they don't even mention any stocks till they get to Nvidia. Sorry, bad habit. Get to Nvidia, and everybody's been looking at Nvidia, so I'm going to give it a look anyway. Pretty easy line. This is a previous analyst price target, and it was pretty well right on. I was in agreement with that price target based on what I saw here. We had a nice leg, measured move, 1-for-1 done right there. We got the 2-for-1 extension out of it, and then we started going parabolic, and that's when things got really interesting. And then, of course, the earnings came out, and it exploded. This is a previous price target I had laid out from a long time ago, and I stem it back somewhere. There's no history of it being here. This is an all-time kind of high, but I set this up, and it came to a point right here. This is where the segment line ended. I don't know how the heck it just randomly ended there, but there it is. I'm going to delete it now because it's irrelevant. Looking at Nvidia now, we've come through that previous analyst target, and now some analysts are pegging that thing at like $600 a share. Some are at $420, and they're kind of spread across the board. Whenever I hear upgrades like that, I always get very curious to look at the price action and say, well, maybe, or I don't know about that. And certainly CNBC is no exception. They tend to be all over the place with a lot of their analysis, but they are looking at the general flow of major media outlets producing these same predictions or same price targets, what have you. I tend to look at the price action and kind of ignore what they're saying, but I don't ignore what they're saying. I take what they say and I analyze it. So looking at this would be a accumulation zone kind of here. We got to a new high. Market doesn't know what to do with itself, so this is where we get consolidation, of course. And if this breaks out into a full measured move, my goodness, that's huge. Can you think of 450 on Nvidia? It's possible. Tech is getting pretty exciting, and this is kind of what we see as the leader of the pack, so to speak, when it comes to watching the tech sector. And as someone was mentioning in a chat earlier, I think it was it Steve or it might have been Mr. Flanagan there. Yeah, kind of scrolling around. Effectively, he's kind of in agreement. I think we're getting ready to see probably one of the biggest bull markets we've ever seen in our lifetime, and tech is leading the way. Well, we've got AI exploding. We've got the advent of electric vehicles coming into play here. We've got Ford, an all-time great, partnering with Tesla and gaining access to Tesla superchargers, and the infrastructure is starting to grow, and the leaders of the pack are starting to take notice and fall in with Tesla there. So effectively, we're going to see a lot more bullishness in the market if this continues, and everything's looking good so far. The only thing looming, that debt ceiling thing, Sure, it can have a huge effect on the market, but in the short term, long term, I think we're in for a ride. Let's go look at a couple others, and there was one that was mentioned that I haven't done anything with yet, and I'm going to look at it for the first time right now. MRVL. I apologize for the background noise. I got a full house. That thing is absolutely parabolic. This might have been related to, I haven't even seen the news on it. Let me read it. Price target set to 55 a share from 45, and that was an upgrade by whom? Nobody knows, just the CEO. Okay. Well, we blew through that. That was pretty simple. Where's 55? Right about here. Drag that down. Okay, cool. Let me make that purple. I like to make those lines purple so they stand out to me. That's where the analyst target was. Well, what's this mess? Look left. There's a trend. 50% retracement of a bearish trend is right on the level with the range, right around where it's at, about 60 bucks, 60 to 62. So price action is king for me, and I know that I can rely on it pretty well, and I can draw these channels pretty much all day long on anything I've ever seen, and I can pick out 50% targets real easy. Just, it's a no-brainer. So anytime I hear an upgrade or a downgrade or something like that, I'll look at the price action and I'll be like, well, okay, I can agree with that. Short, sure, but I think it could go higher. And certainly, when I was hearing all the downgrades back in just before Q4 Tesla earnings, same scenario, only everybody was bearish on it, and I'm just like, no, I'm very bullish on it. I was right. So every time I see this pattern, it stands out to me. And you compare this to market structure, and usually the expected becomes the unexpected. So in market structure, you see, everything kind of rides up, nice big old trend. Then you get capitalization, and you get a decline, and usually it starts with a bear flag and it tips over. Well, not always. In these descending channels, when you find a key support area, eventually you can bounce. So market structure is important to know. Typical market structure does follow through with that plan. This would be a bear flag in that opinion, and then we'd see a further decline, but that's not the case here. So it defied the prediction of market structure. So now we've got some sort of news pop. It's way up there. We'll see what happens with it in the short term. I mean, there could be some trade opportunities to go short on this thing, but I'm not going to short it. Heck no. I think it's still got more room. Anytime you see that pattern, you know where your targets are, but there's more to it than that. Sometimes you'll just retrace the entire pattern and blow off the top. I mean, you're not going to be able to predict that until you get into the price action. And when you see the setup, you want to wait for the break. That was the break. You trade the break. You just be patient. All right, moving on. Let me go back down the list here. Costco was mentioned, and I trade that occasionally. I'm not a huge fan of trading Costco. I just don't tend to like the price action that it provides me. What the heck happened there? New keyboard. I do notice the patterns in Costco. I can go and put the thing together and take some swing trades on. It's just not something I like to trade because I don't necessarily like how expensive the options are unless I see a killer setup like this. This is a nice big old bull flag on the weekly, and if it can break liquidity, sure, it can start running. At that point, I might consider doing some out of the money debit spreads and do the swap strategy similar to what I'm doing with Tesla. But I'm going to wait for this setup to finish because this is tradable. It's day tradable. You can certainly scalp some options movement on that. You can certainly scalp some equity movement on that. And if you've got the capital, you can certainly wheel trade it. There's plenty of premium there. Those options are pretty expensive. But effectively, it's just not my cup of tea for trading as far as my style of trading. Oh my goodness. Bunch of noise in the background here, sorry. Okay, moving on down. Let me get into Gap GPS.
Tell Connor I said to please come down.
All right, so I haven't looked at this one yet. This is the Gap Incorporated, and retail, as we know, has been basically taken in the shorts. Man, it's been pretty bad avenue for brick and mortar, but You know, some of them are starting to come around. You know, they're starting to adapt and overcome and getting into the online space way, way late in the game. But, well, here it is. We've got a key support level it hit here. And let me just see if I can read what they say here. Let's see. GPS gains 8% in early trading despite quarterly net losses. Well, okay, so it's just a little squeeze is all probably. Decent dividend paying stock. You know, it's not terrible to think of maybe wheel trading it, but it's like you got to kind of wonder where the bottom is on this thing. And this is just where market structure does start to make sense. And we're right at a critical level. So this thing can continue to decline unless some changes are made by management. Maybe we got a good chance of returning a little bit of a bullish trend on this thing, but it's not going to be my cup of tea. I don't think I'm going to be looking to trade much of that except for maybe short a couple of pops. That might be a good short. I'm going to stop with that one because that's just, I don't like the setup really. Alta and Estee Lauder, two companies I do trade. Alta is awesome. I prefer to trade Alta over Estee Lauder. Was an excellent short a couple weeks ago. And it continues to just, thrill the bears in this situation. I think we're going to eat this entire area and come right on back to this key level here around 380. Some would call that a blow-off top, but if you look closely, it's really just a retracement. So let me draw real quick here. We have a bullish 1-for-1 measured move. Oh, why am I dragging my chart around? There we go. Bullish 1-for-1's done. So if this is like 1, this is your accumulation, like 2. Oftentimes, when you get these patterns, you'll end up seeing that the price tends to pull back to the previous support. So oftentimes, it's just looked at 50% retracement. We talk about that all the time, whether it's a bull trend retracement or bear trend retracement. It's still usually going to retrace. Great short happened here. Excellent opportunities. I was able to scalp some put debit spreads in there and do pretty well. I kind of got out of them a little early because I was trading really short term. I was like a week or two out to expiration. I was just trading the volatility. So now would I trade it? I might continue to look at some debit spreads out of the money, but I'm going to be looking at a key level. If I can get a spread for a reasonable risk, and I like to be very cheap with those. I mean, 4 cents on a $5 wide for Tesla. Hello. I never exceed 10 cents risk on a $5 wide out of the money, and I'm looking for a percentage trade, and I'm doing it in bulk. So, like, if I'm looking at a $5 wide spread, and I can get it for $10 or less per spread, I'll take advantage of it. I'm gonna look for the swing. So, what it comes down to is if I'm going to ride that, I'm going to look for what is going to be a costly or a cost-effective position to get in. And to get that, I'm probably going to have to look at around the 340 area before that's going to be reasonably affordable. I don't have to let it get in the money to make money. I can just let it get closer to the money. As long as it goes my way with a debit spread, I can continue to make profit on that. But man, that is a parabolic dive. So this is pretty exciting for the bears, but like I said, whenever you see a steep move like that, expect a quick pullback. So eventually someone's going to step in and start buying this thing, but I think they're going to wait till they get all the way down this whole entire liquidity zone. I shade those in gray because they're very relevant to me. Moving on, if you look at Estee Lauder comparatively, it's probably a very similar setup. In fact, I had the dope out for a bearish 1-for-1 after this break. So we'll see if it gets rejected here at this key pivot, this 194.60 area. And if it can resume this trend, we know we get a pretty good shot at a 1-for-1. But note that we've hit a previous support area. Gosh, this looks like, as Creed would say, the 70s glass table. There's a lot of lines on this chart. I've had a lot of different plays on this one, and I have been able to outline the trades on those, but it's not my favorite stock to trade. I'd rather trade Alta. It just has a lot more predictable price action. But this is looking pretty bearish to me. I think we could see a gap down in this thing to 150, maybe even down to 148 if it extends that entire range. But it's going to depend on this key pivot area. Anytime you see there's also a 1-for-1 here in the bear move. Like I said, there's the very high probability of the 50% retracement. It could very well bounce through this and accumulate and run for retracement back up to 239. So, trade the break. Wait for the setup to finish. Be patient. It will give you a sign. Moving down the road here, TJX is, I hate trading that one too. It's just not fun. But they mention it, so I'll look at it. I don't even draw on this one because I just don't like it. A couple of times I've seen the folks over there, and particularly Jim, gets to be a little bit bullish on this. This is one of the club favorites, I guess he calls it. Yeah, you can predict there's some measured moves in here, but it's like, this is really too choppy for an investor to just hang on to. You're going to be having a hard time sleeping at night. Not my cup of tea for a trading stock or an investing stock, but hey, it pays a dividend, so it's got that attraction going for it at least. As far as entries and exits on this thing, you can plot some little support and resistance zones, but it's just, I don't know, it's just a stock that doesn't really appeal to me. I'm very picky with what I'll invest in and what I'll trade and how I'll trade it, and it's just, there's plenty of better plays out there as far as I'm concerned. I hate to say, throw shade at somebody's favorite stock because it is somebody's favorite stock. But that's just the way I do it. I just look at the price action. I don't really have to care what anybody thinks about it. Ford I already looked at, Tesla I already looked at, and that was kind of the last things they mentioned there. Let me go back into a couple other things and wrap up. So let's look at AMD, and that has been a beast. Look at this sucker. Back in the day, I had that $100 price target right here, which was about half of this part of the trend here. You can see there's a leg here, here, and here. Traded that before back here in, March, and got into it late February, and made that move to 100, pulled back, retraced the 50% down to the bottom of this wick here is about where the 50%er is. It's close enough. Did I get long there? I did get long briefly. I took a couple of swings at it, and then I expected to trade it back to $100, and wow, man, it's blasting. So regrettably, I missed the boat on this gap up, but you know what? It's like we've been looking at tech is really starting to make a huge rotation, and it knew the bottom. That rotation's already done. Now we're just riding momentum, and things are just looking up and up for a lot of big tech. AMD is no exception. I mean, that thing has the potential to run. Probably next target's going to be about 135.50 as far as general price action goes. We blew through this target. We're at about this level now. We could see some accumulation here. That'd be nice because it'd give us a chance to catch our breath and get back into the swing of that. We might get one more push on up. Certainly couldn't hurt to realize that this is going to present a few price targets on the way, and it could go all the way to the top. I'm going to put a pivot here at about 146. That's kind of an area of control here beyond here. And it's just a matter of trading from one pivot to the next. You kind of you write your trading plan as a program. If this, then that. If this, then that. Rinse, repeat. It's really that simple. But let's drill into the short term on this thing. So we look at the pivot swing, and man, it ran exactly one for one out of that. And now we've got basically a measured move that's nearly completed. If you want to draw it down here, stack it up to about the top of that. Sure, we've hit it pretty well. I would almost certainly expect to pull back today to find a 50% of this channel here. If you want to say maybe get into power hour, look for a quick swing right around the middle of this guy, probably around 124. We'll see if we get a little quick reversal to resume this trend. We might get a scalp into the power hour on that thing. As for Friday, it's like you kind of wonder if you're going to get into a good power hour or not. Typically, they're quiet before a long weekend. Oftentimes, they're bearish before a long weekend. Everybody just kind of cashes out because they won't have access until Tuesday. Kind of a known fact. So a lot of people are taking profit here already, and before the middle of the day even. And now we're kind of approaching the midday to where we could take a swing on this. I might consider running a condor on this until it picks a direction and then ride the winning side and do a swap on that. That'd be my way to take on this thing because it's pretty much gone parabolic. We've got just a massive push out of this thing. So taking a side or another side can be a little riskier than taking a neutral side and just riding the winner. Being that we've made a parabolic move, there might be some short interest in here. We'll have to dig into a little bit of fundamental stuff to kind of figure out what their sentiment might be. We could go and certainly look at ChatterQuant and figure out what the sentiment currently is, but that's always dynamic and everybody looks at it. So know that that's going to have an influence on price. There may be some shorts waiting to sell this, and you kind of got to wonder. Short term for the close today, I like to mark the 5-minute liquidity zones out. If you looked at the SPY chart I shared yesterday, it kind of looked exactly like this. Just look for wicks on your 5-minute candles and drag out a box off those things. We know about where the base is and everything, so cover it up. So you have a pivot in the middle here. It's kind of the high of the central pivot where we're looking at the 50% move. There is liquidity here. There should be some buyers here. This would be at least a short-term demand zone. And like I said, if I'm watching for a reversal for a day trade into the close on this thing, that's where I'm going to look for my play if I've missed the boat here. And this is where I'd look for my exit. That's where a lot of sellers are. This would be the supply zone. This would be the demand zone. Short term, this is more of a central pivot. If it breaches this, the next demand zone's down here. So trade from one to the other. It's just making your plan. Effectively, it's kind of a slow for a Friday as far as having a lot to talk about. Really, there's not a whole lot more to go on for this Friday, other than to tell everybody to have a happy, safe, and wonderful weekend. I know my family's got a lot of plans for this weekend to have a great time, and we're going to certainly do that. House is already filling up, so we're getting ready to go out and have some fun. I recommend the same for everybody. Get away from your charts for a weekend and just go hang it up. We'll keep the market closed on Tuesday, and we can have a day to just sleep in and recuperate from our long weekend of enjoyment. And certainly thanks for joining me. I really appreciate everybody. I've been making some kind of moves. I've been reaching out to some people and making some things happen. As some of you may know, I had a long conversation with one particular founder of Wall Street Bets guy, and I'm kind of talking to Jamie a little bit lately about some things, and there might be some really fun things to collaborate on in the near future. Just kind of hint that out there. I also got really excited yesterday when I posted a tweet on my personal Twitter and kind of tagged John Bollinger in it, and he replied. I'm like, wow, he really does know my name. Kind of a proud moment, I guess. So look forward to a lot of fun stuff coming up in the near future for me, and I'm really getting excited about it. So hopefully, things kind of work out to where we can get some collaborative stuff going and have just some really great times, talking to each other. And I would love to be part of bridging that kind of gap between retail and institutional traders. Anyways, I like being in both worlds. Why not synergize that a little bit and maybe create a little bit of a bridge to one to the other? Because I think if we work together in this market, we can all take advantage of that tide that kind of raises all the boats, so to speak. So that's the way I feel about it. I have big dreams in that, and maybe one day they can come true, but who knows? In the meantime, I'll just stay humble and keep doing what I do. Thanks for joining me again, guys. We'll see you around next time, and have a wonderful weekend.